Hi friends, welcome to my channel. So this is a special learning video which I'll be posting for you. So many of the YouTubers you might be seeing on the YouTube and you might be reading on the books, and I would say mainly these days the retailers don't read the books, they just follow other YouTubers. So if you notice other YouTubers, they are mainly focused into one of two things. The first thing is they teach you is a strategy. It might be any kind of a strategy. I'll come down to the strategy. And the second one, they teach about you the indicators like RSI, Bollinger Bands, moving averages, or Fibonacci. I don't know, you name it. I can tell you that indicators. So based on this, they always speak about the strategies. Strategies like an inside candle strategy. They speak about the accumulation. They talk about the breakout strategy. They talk about as a support breaking strategy, support and resistance strategy. These strategies, they keep telling you and they just keep brainwashing you, and they say like we have to implement this kind of a strategy, we have to implement that kind of a strategy. You name the strategy, I can show you 100 strategies in the stock market. Like here I've shown you a breakout strategy, and I've shown you like support and resistance, and I've shown you a W pattern, I've shown you an M patterns, and I've shown you and I can even show you like different ascending different wedge in here, nice and pretty wedge which has been forming, and even I can show higher highs which has been forming here, and I can show you different sorts of in a setup in today's trade. But finally what happens in the stock market is like the buyer and seller decides the price. Strategy comes the next. So before that, please do understand what sort of a market you are trading. Are you trading in a trending market? Are you trading in consolidation market? Are you trading in volatile market? Are you trading in stop run market? So as a professional trader, like if you want to be a professional and if you want to make money consistently in the market, first and foremost you need to do is like you must identify what kind of a market it is going to be today. Is it going to be a trending market like today we had? It will be whether it will be a flow driven market, whether it will be a consolidation market, whether it is a volatile market, or whether it is a stop run market and flushing it back. So you need to identify the market. I'll show you an example. Like if you notice today, like it is a clearly a trending market, but I'll come back to this analysis in different video. But today it's a completely trending market. You can see like one direction, and yesterday if you notice it is a completely a volatile market, and the day before if you notice it is completely a stop run market, and the other day if you notice like it is a volatile market again, and the day before like if you notice it is just a consolidation market. It's a range bound, what we can a range bound market. So when you see like when you are able to identify this kind of markets, then it will be easy for you to make the money. If you identify a consolidation or a range bound market, we are going to scalp the momentum. If you identify a volatile market, so in the volatile market it will be a greater number of prices, so we'll be just taking some of the points like 100 to 100 points and we'll be coming out of the market. So if it is a trending market, we are going to sit from the morning until the trend says like trend goes into sideways. If the market is like aggressively sell off and if it is coming in the opposite direction, or if it is coming aggressively sell off and if it is making another direction or a stop run, then we are implementing like 120 points. That is the time when you need to implement the strategy. So the strategy never comes the first, the strategy comes later after knowing the market. If you know the range bound market, we have to play a range bound strategies. If you know it is a trending market, we have to use the trending market strategies. If it is a volatile market, we need to have a volatile market strategies. It is totally about the size and other things like how big you are going and how big size you are putting. It is totally depends on you. That is totally a risk management. But I'm coming and teaching you something different where you can't see in any other YouTube, or you don't find anything, you can't find in any other place. The main thing you need to identify is what sort of a market it is going to be today. The market will tell you in early phase itself, like today I'm going to be in a range bound market, today I'm going to be a trending market, today I'm going to be a flow driven market, today I'm going to be a volatile market. The market will give you the signs. So that is what we teach in our classes. That is what we explain for you and make you professional traders, like how you need to identify the markets, what will happen when the trending markets are there in the market, and what will happen when there is a volatile markets, and how you need to downplay and what strategies you need to apply. The strategies, like you can implement the strategies as I mentioned you. When there is a volatile market, you need to have a volatile strategies. When you're having a trending markets, you need to have a trending market strategies, because when there is a trend in the market, there will be a momentum and the price will be moving aggressively on one direction, so we need to sit in the market. So that strategy is totally different. So please understand that strategy comes next. You learn any strategy, the strategy comes next. But first and foremost thing, what the retailers, they do the biggest mistake and why they lose the money is, like with my experience, and I have seen my experience, they don't understand what sort of a market is today. They just come blindly and see, like, okay, I saw a big bullish candle and I'm just going to buy the market. No, it doesn't work. It doesn't work. Why? Come to the order flow. There is a 1.25 million contracts has been brought today. Did the price move on the upside? Absolutely no, because there is a seller in the market. Clearly there is a seller in the market. There's no debate, like we can't debate. There is a buyer sitting, yes, but there is a buyer who wants to buy, but at the same time there is a seller. The seller is resisting. Resisting is like there is a resistance coming from the seller. The seller doesn't want the price to go up, so he's stopping the price. Please understand that. What sort of a market you are playing. See, the price came to these levels once, the price came to this level twice, but the price couldn't go through because there's a big seller sitting on the opposite direction. He didn't let the price to go. At the same time, there's a buyer in the market. The buyer didn't want the price to go on the downside, so both are fighting. So that is why the markets are behaving too much of volatility. That is when you see too much of volatility in the market. The buyer want to buy and seller want to sell. Yes, the same thing has happened here. The buyer want to buy and seller want to sell. So why these moments happen? Why this momentum will come? How the stops will trigger? This is what we teach in our classes. So please understand. Please understand. Please try to identify the market. Even if you don't join my class, that's fine, no problem. But don't lose your hard-earned money. Please do identify what sort of a market you're trading. I can show you a number of levels. You can identify the levels. For levels, don't watch any YouTubers. Levels you can easily identify. How? Very simple. Just go to your daily time frame. If you're trading for a week, go to a daily time frame. If you're trading for a complete whole week, just go to the monthly time frame. And if you're trading for monthly, you just go to yearly time frame. That's it. Doesn't make much difference for you. If you want to trade this entire whole week, yes, just go to daily time frame and just check it. And if you want to trade entire 2 weeks or more than a month, entire month, you just go to the weekly time frame and just check it. That's how you can take the levels if you want to be a positional trader. But if you want to be intraday trader, like daily time frame is enough for you. You don't need to see a weekly time frame and find out the levels. No, that is rubbish. You can do by yourself. See, I very clearly said like 34,800 is acting as a good support for the market. Yesterday it respected once, twice, thrice, but today it opened below that. Nevertheless, again it came and it retested some time, and later there was a flush in the market. You can easily identify the levels, but at that levels you need to see the interaction, what is happening between buyer and seller. Is a buyer coming and buying aggressively? The levels are meant to know like whether the buyer is buying or the seller is stopping his selling. Please listen carefully. Seller will stop selling there. That doesn't mean like the buyer is coming and buying aggressively because that's a cheaper price. No. So it won't happen, because you can notice like today 34,500 was acting a good support. Even I mentioned you several times 34,500 was acting a good support levels for the market. So what had happened? The seller stopped selling. The seller stopped selling so that the buyers can enter and buy the market. Here it was a little bit of a confusion today. Here it was the seller stopped. There was a seller, there was 100% there was a seller in the market, but the seller stopped. That doesn't mean like he's not going to sell it. He just stopped to certain levels. He is stopping you. When he stops, the retailers or someone or the algorithms will come and book the profit. That is when the market starts to rotate on the opposite direction. That doesn't mean like the market is going on the opposite direction, you should sit in the opposite direction. No, there is a clear trend in the market. There is a very clear trend in the market. You can't sit. So that is why I was mentioning for you to sit only about 260. Why? Because the people who are shorted here, the stop losses will be here. When it crosses 260, so these people will try to cover their shorts and the market will go in opposite direction. But no, there is a trend in the market. What is the trend? The trend is completely on the downside. The trend was there in the market. So that is what you need to understand it. You can't go and sit randomly, or you can't go and buy randomly. You need to have certain logics. Whenever any certain level comes, you should be cautious. We just don't go and buy at that levels. We need to see the buyer has to enter into the market. The buyer need to lift the prices aggressively, neither aggressively, at least passively. The buyer has to come and lift the prices so that the short sellers, so they come and cover their shorts and they propel the market higher on the opposite direction. But no, now we see the levels, just we book a profit. If we are sitting in that direction, we'll try to book a profits at that levels, because there are number of participants who are participating in the market. So everyone wants to get out of that position to at that certain levels before the algorithms exit from that positions. We retailers, we need to exit it. So that is why the levels are meant for, not like we need to take the re-entry or we need to do the over trading there. So please understand what sort of a market you are trading. Are you trading a trending market? Are you trading a volatile market? If you are trading volatile market, you need to apply volatile market strategies. If you're trading a trending market, you just apply the trending market strategies. If you are trading a range bound market, you just need to apply a range bound market strategies. If you're trading again a volatile market, like, you need to apply the volatile market strategies. Volatile market strategy, whatever it might be a breakout or positions unwinding. And I've give you, like, here it was a position unwinding strategy it was. And when there was a volatile market, and I gave you a volatile market strategy, and we made good amount of profit in here. And I apply the strategies after seeing the market, after analyzing the market, because I have that skill. I know after seeing immediately, as soon as I see the market, first 5 minutes or 1 minute, sometimes for me 1 or 5 minutes is enough for me today to identify, is this a volatile market, or it's a range bound market, or it's a trending market. I can easily identify because I adopted that skill, and I kept seeing this market several times. I've seen the charts, I've seen the order flows, I've seen the price ladders, I've seen the book maps, I've seen the profiles, and I keep doing some other sorts of research. So that is why as soon as I see these things, like, I can tell you, like, the markets will be these things, the market can go up until here. So today I made you to sit below 2, somewhere like 420. So once the price closes 420, like, immediately we got a very good flush. But why I said not to trade even calls or puts? Because I saw there was no volume was coming, absolutely no volume. The volume was completely dead. There was absolutely no volume was coming today. So rather than playing that, we just stay out and let some other one gamble, let them lose the money. We can sit on the trending day, or we can sit at a volatile day. At least today is a trending day. I've clearly identified it's a trending day, but the trend is not that strong because there is a buyer who wants to come and buy the market up. So that is causing a trouble in the market. Someone wants to be, when you see a trending markets, all the big time frame players should become in one direction. They should let the price to move in one direction. All the big time frame players, it might be institutions, it might be hedge funds or mutual funds, whoever it is, all big players should be in one direction itself. But today we are seeing contradictory, completely totally different. and later once this 420 the levels came and 420 didn't go through, like these levels 34,500, it couldn't go through, and I saw like the volume was completely dry. When the volume gets dry, we have to just stay out of the market. I would promise you many people might have lost the money in this move. Just go and check, many people might have lost the money today. Whoever has played this role, they would have lost the money. The only way you could have made the money was this move. Apart from that, there was absolutely no move at all. And today, this morning, I was busy, so I couldn't give you, and the premiums are extremely high, and that was the reason why I couldn't give you. I could have given you this move, but I was busy in the work, and later I saw there was completely dry in the volume. I said, stay away from the market. So please understand what market you are trading. You are trading a range bound market, you're trading a volatile market, you're trading a liquidation market, you're trading a stop run market. There are a number of markets that you need to identify. That is what we teach in our classes. So please do subscribe our channel, and please share with your friends as much as possible, and I'll be posting much more learning videos like this. Thank you so much.